Accounting standards dash the statute. A. Can override the statute. B. Accounting standards cannot override the statute. C. Accounting standards may override the statute. And D. None of these. Accounting standards cannot override the statute. Statute would mean the law cannot override the law of the land. Next, match the following. So you have AS1, you have AS10, AS6, AS26 and AS29. I'll give you a minute to match these. There are 5 on this side and 6 on the other. AS1 is disclosure of accounting policies. AS10 is fixed assets. Accounting for fixed assets. AS6 is depreciation accounting. AS26 is intangible assets. And AS29 is provisions, contingent liabilities and contingent assets. You are left with inventory valuation, which would have been AS2. AS1, disclosure of accounting policies. 10 is fixed assets. 6 is depreciation accounting. 26 intangible assets. And 29 is provisions, contingent liabilities and contingent assets. Next. AS8 on accounting for research and development. A is replaced by AS26, B is applicable only to listed companies, C is mandatory for research institution and D still in use. AS8 accounting for research and development. Answer is A has been replaced by AS26. Correct answer A. Next, the accounting standards are mandatory for A. companies, B. partnership concerns, C. charitable organizations and D. sole proprietorship. Accounting standards are mandatory for companies. They are mandatory for companies. Accounting standards refer to specific accounting A. principles, B. methods of applying those principles, C. both A and B above and D. none. Accounting standards refer to specific principles and methods of applying to those principles. So both A and B above are right. If we take an example to understand principle, charging depreciation is a principle. When we buy an asset which can be used over a period of more than 1 year, we write off the cost of this asset over the life of the asset. That is the principle of depreciation. However, how to apply this principle, the method of applying this principle, applying depreciation, I could use what is called a straight line method. I could use the written down value method. I may use productive hours method, etc., etc., etc. So what is the method of applying the principle of depreciation? So accounting standard refers to accounting principles and the methods of applying those principles. In some cases like valuation of inventories, investments, depreciation accounting, etc., there are a few methods. Alternative methods have been prescribed by accounting standard. So the correct answer in this case was both A and B. Next, AS2 is on A. disclosure of accounting policies, B. valuation of inventories, C. revenue recognition and D. depreciation accounting. AS2 is on valuation of inventories. Correct answer B. Disclosure of accounting policies was AS1. Revenue recognition was AS9. Depreciation accounting was AS6. Valuation of inventories. Next, Which of the following provide framework and accounting policies so that the financial statements of different enterprises become comparable? A. Business standards, B. Accounting standards, C. Market standards, and D. None of the above. Obviously, accounting standards provide the framework and accounting policies so that financial statements are comparable.